But welcome to today's morning market blast. It is, what day is it? It's the 3rd of March. Can you believe it? Before we go any further, I'll do the legals in case they weren't heard the first time. So nothing discussed in this space is session constitute trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trading as PIQ or PIQ Suite, or indeed the hosts, which hopefully today is going to be Mr. Michael Brown and myself, Ryan Paisley. Michael Brown, can you hear me? Over.
Yes, I can. Good morning, Ryan. Good morning, everyone. Welcome to what is now the afternoon blast on Monday,
Hey.
the 3rd of March. I was going to apologise for being late, but looks like it didn't matter.
No, yeah, I'm not really sure what was going on there. But it's working on my mobile, so that's the main thing, I guess. But anyway,
Oh,
what's been
well, very good.
occurring?
Indeed, what has been occurring? Good morning, everyone. Let's take a look back to Friday and over the weekend before looking ahead to what this week may have in store. Obviously, it's kind of impossible to kick things off this morning without at least making mention of the shambles, let's call it what it was, in the Oval Office on Friday. Ryan and I were in the pub at the time, but nonetheless, we did see what happened. Obviously, this sort of three-way spat between
Oh, yeah.
President Trump, Vice President Vance, and Ukrainian President Zelensky. Effectively, they were obviously sat chatting away in the Oval Office in front of the cameras. It then descended into a shouting match, really, which none of the three have come out of particularly well. The cameras were then thrown out of the room, and very shortly after, Zelensky was thrown out of the White House because Trump was saying that apparently he has disrespected America, and that he can come back when he is ready for peace and not ready for war. Of course, this setting aside the pretty terrible optics of the situation, this has made the road towards a truce or a peace deal or any sort of ceasefire a much longer and much bumpier one. It has also naturally sparked quite considerable concern in Europe, as we saw over the weekend with Zelensky in London meeting PM Starmer and also a whole bunch of other European leaders who have again committed to increasing their defence spending. It seems like the plan now, as much as there is a plan, is that the Ukrainian PM Zelensky and the European leaders are going to agree some sort of peace package, and then it is likely going to be down to Keir Starmer, God help us, to go and present that to Donald Trump and see what he says. Of course, the situation remains incredibly fluid, incredibly volatile, and incredibly uncertain. But that seems to be where we stand at the moment. I think the only certainty out there at the moment in terms of the geopolitical realm is that defence spending is going to increase and probably going to increase in relatively short order. And European defence names are reacting in kind this morning. Rheinmetall trading as much as 20% higher. BAE Systems, Dassault Aviation, they're up about 13%. Leonardo trading at a record high, up about 20%. Who needs weekend vol in crypto when you've got defense stocks soaring like this on a Monday morning? But of course, market participants will remain very, very closely aware of what's going on in the geopolitical realm. It must be said, though, that the shenanigans in the Oval Office didn't particularly derail the equity market into the close on Friday. Both the S&P 500 and the Nasdaq 100 adding about 1.5% into the last close of the month. I am going to be utterly shameless and blame that on month-end rebalancing in the absence of any
Yes.
other obvious catalyst. But we did have something of a haven feel to markets elsewhere. Treasuries rallying across the curve, 2 and 10-year yields falling by 5 basis points apiece, the former falling back under 4%, the latter testing 4.2% to the downside, and the dollar gaining ground pretty broadly as well, with the dollar index up 0.25% on Friday, and also actually notching its first weekly advance in 4 when you look at the greenback. Of course, other G10s trading softer as a result. In terms of other bits and bobs, then, let's just stick with the US. Of course, the other issue that remains on market participants' minds is this issue of tariffs. Of course, we are now just Well, effectively a day away from the 4th of March deadline when we are supposedly going to get a 25% US tariff on Canadian and Mexican goods and the additional 10% on Chinese imports, which would take that to 20% in total. We heard from the Treasury Secretary, Scott Bessent, on Friday late on, who effectively confirmed what we already knew, which is that these tariffs that Trump is throwing on the US's two closest neighbours, they are nothing to do with fentanyl. They are nothing to do with immigration. They're all just basically a way of getting at China, because Scott Bessent said that the US is basically wanting Canada and Mexico to match the tariffs that the US is putting in place on China. Thinking out loud here and taking that a step further, does that mean that if they match the tariffs, then the potential for the levies to be imposed on those countries is going to be off the table? Mexico are sounding like they are open to doing that, and actually have been making sort of overtures in that respect towards potentially imposing greater levies on imports from China. Canada haven't, and the issue with the Canadian side of things is that it does seem to be playing quite well politically in Canada to stand up to President Trump. The Liberal Party, if you look at opinion polling, obviously Canada is heading towards elections probably within the next couple of months. The Liberal Party have had a sort of Lazarus-like recovery in the opinion polls in Canada as a result of basically telling Trump to bugger off. So I do wonder whether it's going to be quite as easy for Trudeau or Carney, when he comes into office, likely on Sunday, to actually do the same thing as Mexico and say, okay, fine, we'll follow your lead in terms of tariffs. But that's certainly going to be one to watch today. Last thing politically, Trump signed an executive order on Friday to make English the official language in the United States. Firstly, I thought it already was. Secondly, maybe they can speak it properly rather than the weird dialect that they seem to use, but we will leave that for another day. In terms of economic data on Friday, we had the core PCE figures out of the United States. Of course, the Fed's preferred inflation metric, PCE rose, core PCE, forgive me, rose 2.6% on the year in January, bang in line with expectations. It wasn't particularly much of a market mover, although it is the slowest annual pace of inflation in about 6 months. A couple of other bits and bobs. The European Union, a bit of one for the purists, but bank capital is back in the headlines. Of course, the Basel III implementation has just been endlessly delayed across the globe. The UK have pushed it back another year. The US have pushed it back another year. Switzerland have pushed it back another year. Basically, the only people who are actually talking about this going into effect when it was meant to are the EU, which has caused all of the European banks to go into absolute uproar, rightly so, because they're saying, well, fine, if you want to take this holier than thou attitude and implement things on time, great, but it's going to put us at a massive disadvantage to our global competitors, because people like Deutsche and BNP Paribas and SocGen are going to have to hold much more capital than their counterparts in the US and in the UK. So it's rumoured that that is potentially going to be delayed once more in Europe. We heard from the Politburo in China. Any country that has a Politburo is just uninvestable in my mind, but never mind. This lot was saying that they want to stabilise both the housing and the equity market, and promote technological innovation and development. It is the China NPC meeting this week. I think that's Wednesday and Thursday, so do just bear that in mind for any of the Asian focused traders out there. And last, oh dear, excuse me. Oh, bloody hell.
Uh-oh.
Last but by no means least, before I die, we heard from the Bank of England Deputy Governor Dave Ramsden on Friday as well. He was taking a bit of a step away from his dovishness of late, noting that risks around inflation are somewhat more two-sided. There may be circumstances where a slower move back to neutral is justified, but also times when that pace has to quicken. So a little bit non-committal, but when you think about Ramsden having been one of the three members on the MPC who voted for a 25 bip cut in December, he is perhaps just edging away from that dovish stance a little bit. And for now, that is all from me.
Thank you, Mr. Oh, God, I've got it as well. Thank you very much, Mr. Michael Brown. Before I do go on, big shout out to both Cam, Crypto Cam, and Zach. Cam's now feeling much better. I hope everyone's pleased to hear that. And so hopefully we get some Crypto Blast coming back. And Zach is back from his yet another holiday. So
Oh,
yeah, the overnight news
how
roundups are
long's he back
back.
for? A couple of days?
A couple of days. How Judith Chalmers got a cruise next. Anyway, moving on. So just a few quick headlines via the overnight news roundup. Obviously, check our pinned tweet for the full menu of things that we've got on today in terms of the blasts, the overnight news roundups, etc. So firstly, tariff trade. Obviously, Michael touched on a bit of this earlier on, but tariffs on Canada, Mexico, and China obviously going into effect on Tuesday. The although the Canadian and Mexico tariffs are yet levels to be levels are as of yet undecided, but the additional 10 on top of the existing 10 on China, apparently that's set. Inflation impact. Treasury Secretary Bezant believes that tariffs won't raise US inflation because China will eat the tariffs. Good luck with that. And as Mexico has offered to match US duties on China, lumber probe. Everyone's got wood. Trump ordered an
Oh,
investigation into imported lumber, citing national security concerns. China countermeasures. China plans both tariff and non-tariff retaliations against US agricultural and food products if Tuesday's duties proceed. That's according to the Global Times. Anyone that was living under a rock over the weekend, crypto reserves. US crypto reserve. Trump's plans to create a strategic reserve, including Bitcoin, Ether, Solana, Ripple, and Cardano. And that drove a huge surge on Sunday in the crypto markets. Dollar weakness, growing bets against the greenback reflect concerns about a cooling in US economy and risk of a broader trade war. That's according to Bloomberg. And executive orders. Trump has signed over 75 executive orders in his second term, though challenged by lawsuits, but most remain intact. Some geopolitical,
it's
start.
all falling apart, isn't it?
Oh God! Well, do you know what? Should we just tune in tomorrow? Geopolitical news: Ukraine truce efforts. UK and France seek a one-month ceasefire deal with Russia to jumpstart peace talks. As Michael alluded to, it seems to be now falling on UK and France to sort this out. And I do believe I read something either last night or this morning, I can't remember which, where Starmer basically said, we're going to go ahead and just sort it out. We'll try and sort it out, and then we'll go to the US
Mm.
with a kind of a finished article or finished plan. Energy in Russia, a close Putin ally, claims to restart the Nord Stream 2 pipeline with backing from US investors, reflecting Trump's overtures to Moscow. Israel Gaza, Israel
Sorry,
ended.
just on that,
Yes.
I'm. I may have got this wrong. I'm 90% sure I saw a headline or a poll or something last week. Um, German industry are apparently begging for the Russian gas taps to be turned back on because they reckon that that's the only way they're going to turn things around.
Yeah, I'm not surprised. I think yeah, it's one of those things. It's unfortunately, if you just last long enough, people then just kind of forget why you turned them off in the first place.
Mm.
But yeah, Gaza. Israel ended goods entry into Gaza after a 42-day ceasefire expired with no new agreement. Some China policy signals. Official PMIs and Kaksan survey showed China's manufacturing is back in expansion territory, buoying
Yeah, of
near-term
course
growth
it is.
hopes. Yeah, but yeah, grain of salt with anything related to Chinese data. PBOC measures the China's central bank will keep financing costs low for private firms, reinforcing policy support for the economy. Media messaging out there, state outlets highlight Xi's pro-private sector stance, aiming to reassure businesses amid tariff and global pressures. Finally, just some corporate market news. Tesla, Morgan Stanley's top pick in autos with 50% upside, price target of $430. Potential year-on-year deliveries drop in 2025 could be a buying opportunity. Again, that's according to Morgan Stanley. Nvidia, if Tom's about, hopefully this is one for Tom. Chinese buyers are skirting US restrictions by purchasing advanced AI chips via third-party resellers. This is the Wall Street Journal just bringing a story to market that we kind of have known for the past 6 months. TSMC, no slowdown in the COWOS packaging demand, despite rumours. It aims for
What?
seven. Yeah, I don't know. It's a Kawas. Oh yeah, that'll do. It aims for 70,000 wafers per month by late 2025. Shell weighs selling some chemical operations in Europe and the US to focus on more profitable lines. Finally, Prada and Versace, because I know Michael's a big fan of high fashion. Prada
Oh,
nears a 1.5 billion deal to buy Versace from Capri Holdings. Now, I've no idea if they relate to Capri Sun. I doubt it, but maybe.
yeah, I doubt that one as well, mate. To be completely honest with you.
Oh, Zach's texting me about chip on wafer on substrate, but yeah. Okay, thanks, mate. Nerd.
He's just trying to prove that he was doing something last week, isn't he?
Yeah, no, I know what he was doing. I follow him on Instagram. I know exactly what he was doing. It
Oh,
wasn't
God.
anything to do with this. But anyway, that's it
Oh,
from me.
no.
Back to you in the studio.
Right, yeah, probably best to move on from that. In terms of today, then, and this week, actually, first things first, it is just worth mentioning because I like market history every now and again. 5 years ago today, that the Fed delivered a 50 basis point cut at the start of the pandemic, which simultaneously feels like it was about 30 years ago, but also I remember it like it was yesterday. But there you go. Markets have obviously come a hell of a long way since then. Don't think we're going to get any emergency Fed action today, but we do have a few bits and bobs on the data docket nonetheless. Some final manufacturing PMI surveys due out of Europe and the UK this morning, unlikely to be major market movers. We do, though, at 10 o'clock have the latest flash inflation figures out of the Eurozone. Headline CPI, that's seen rising by 2.3% on an annual basis in February, down from the 2.7% that we saw in January. Basically, energy prices pushed inflation higher in Jan, and they're going to push it back down again in Feb. The core metric, that's seen at 2.5%, down from a prior 2.7. Of course, nothing in this data is likely to deter the ECB for another 25 basis point rate cut at their next meeting on Thursday. And then this afternoon, we have the latest ISM manufacturing PMI figures out of the States. That index expected at 50.8 in February, modestly lower than the 50.9 that we saw in Jan. But I think that's going to be pivotal in terms of the broader macro narrative in the United States at the moment. Of course, the market getting all jittery and nervous about the potential for a US economic slowdown, a bit of growth scare creeping in. If I can get my
What is
teeth in
going
the
on?
right place.
What is going on?
I know.
Oh my
So I do.
God.
I do think the market is going to be a little bit unforgiving if we see any negative surprises there. In terms of other bits and bobs for the week ahead, on the subject of US economic activity, we have the latest ISM services PMI figures. They are due out on Wednesday. The index seen at 52.9, up from the prior 52.8. And then, of course, with Friday being the first Friday of the month, we have the February labour market report due. Headline non-farm payrolls seen rising. Well, I'll get onto that in a second. Headline non-farm payrolls seen rising by 160,000, although the range of, well, they are basically guesses at this point, is between 100 and 300,000. So do just bear that one in mind. Unemployment seen holding steady at 4%, average hourly earnings growth cooling to 0.3 from 0.5% previously. In terms of other bits and bobs, a relatively busy week on the central banking front. Only the ECB due to announce policy with that 25 basis point cut likely on Thursday. Of course, focus there will be on the ECB's commentary, particularly as to whether the policy stance is still seen as restrictive. Schnabel says the policy is not restrictive. If the ECB drop that from their language, then it likely means they're going to move away from this cut at every meeting cadence that they've been following for quite some time now. We also, though, have a busy week of central bank speakers. On Wednesday, Bank of England Governor Bailey, Chief Economist Hugh Pill, and external MPC members Green and Taylor. They will be speaking in front of the Treasury Select Committee. And then on Friday, we have a ridiculously busy schedule, to be honest with you. We're due to hear from Fed Chair Powell. I want a word with the Fed. Who schedules Powell at 5:30 on a Friday evening in London? That is not on
That's all right. It's fine. We'll
whatsoever.
get it on. I'm sure the token house will put it on the big screen.
I think they're going to have to. We also have on Friday hear from ECB President Lagarde as well as 6 other members of the Governing Council. And last but by no means least, earnings season, the pace of corporate earnings is starting to slow quite significantly now. We're through the bulk of earnings season. A couple worth flagging this week, though. Before the market open on Tuesday, tomorrow, we hear from Target. They will be pretty interesting because, of course, the market reacted quite adversely to those earnings that we had from Walmart a few weeks ago. So I think retail earnings are going to be in focus, particularly in terms of guidance around consumer spending and the potential impact of tariffs. And then on Thursday, after the market closed, we're due to hear from Broadcom. And of course, they will be of particular interest to the AI, tech, and chip focused folk out there. And at the end of all of that, we can go to the pub on Friday.
Well, you say at the end of all of that, I'll be there before the end. I'm not
Well,
going to
you're
wait
probably there
until after
now.
Plough. Well, do you know what? Yeah, after after this morning's show, I'm seriously considering going straight to the pub. Um, but Mr. Brown is correct. Obviously, this Friday for UK London-based people, we are just
Oh,
going
you
to
can
round,
travel.
or you can
We're
travel.
not
Yeah,
paying for
exactly.
your travel, but if you want to come,
Yeah, well, and also to be very clear, as me and Michael were
I'm not
talking
buying
about,
you a beer.
yeah, it was raised last Friday when me and Michael were in the pub. We're like, hang on a second, we better clarify that we're not buying beers. We will maybe for ourselves, but yeah. So, but no, it'd be great to see anyone. I think there's a decent crowd already planning on turning up, so that'd be good. But yeah, if you want to come down and just chat shit basically, and maybe watch Pow on the big screen in the pub, we won't be doing that. Do please come along. It'd be good to see you all, especially the people that we all already know through beers and such over the past few years and that. So yeah, it'd be great to see you. But Mr. Michael Brown, on that, hopefully tomorrow's show goes a little bit smoother than today's.
Well,
Uh,
I don't want to tempt fate and say it can't be worse, but
Oh God! Oh, why did you say that? But but yeah. On that note, see you tomorrow.